Infrastructure can play a diversifying role in any portfolio through its defensive attributes, inflation-protecting characteristics, and higher income yield through time. We've historically seen a lower volatility outcome for investors. An additional benefit of listed infrastructure is its readily available liquidity for investors. We invest in infrastructure assets that provide essential services to our society, such as toll roads, electricity grids, water utilities, and telecommunication towers. The defensiveness of the asset class comes from the fact that these assets are providing essential services to a large population, are fundamental in the functioning of our societies, and are critical in delivering strong economic growth into the future.
We believe that our key points of difference are the experience and alignment of the investment team, as well as our approach to investing. Our strategy has been running for over 10 years, and our investment philosophy has remained unchanged throughout this period.
Our definition of infrastructure includes only those companies that offer the best combination of low volatility cash flow and inflation protection. We focus on these attributes in order to deliver higher income than global equities, defensiveness, inflation linkage, and also portfolio diversification.
A key differentiator of our strategy is the alignment of the investment team. Our business was started as a boutique within Maple-Brown Abbott, and so is majority owned by the listed infrastructure founders and investment team. And as custodians of our clients' capital, we believe it's critically important that the team is strongly aligned with our investors for the long term, with significant personal investments in the funds alongside our investors. The size and experience of our team reflects the specialist nature of our asset class, but also the growth and diversity of our client base. Importantly too, we have a dedicated ESG analyst who sits within the listed infrastructure team.
Financial and ESG factors are inextricably linked, and they cannot be kept separate when we invest in listed infrastructure companies. And we carry this ethos into everything that we do, starting from our buy decisions through to ongoing research, engagement, proxy voting decisions, and even sell decisions. The culmination of these activities allows us to hold companies accountable to their targets and metrics, and also drive change on areas such as climate change, decarbonisation, human rights, and board diversity.
The energy transition to renewables is well underway. We think this is structural, not cyclical. Quite simply, the world needs more investment in infrastructure to improve living standards and to provide cleaner and more secure energy supply.
Listed infrastructure companies play a critical role in contributing to a more sustainable future for our planet. As long-term, privileged assets, it is essential that infrastructure companies have a strong social license to operate and ambitious environmental strategies backed by robust governance frameworks.
Rather than taking a binary view of low-emitting companies versus high-emitting companies, our approach is always about the rate of change, and also, importantly, what role we can play as investors in driving that change.
Infrastructure assets have the potential to deliver long-term, attractive, risk-adjusted returns through their more stable cash flows and natural inflation linkages. And it's for these reasons that we believe infrastructure can play a key defensive role in any portfolio.